I think all roads lead to the United States wanting quantum supremacy. I think the race with China is a powerful motivator. Even if you're worried about protecting the Bitcoin reserve, you want to be first and not them. And so I think the sort of the path we've been talking about is overdetermined. Now, that doesn't answer the question of what you do. I tend to think the answer is probably not you seize Satoshi's coins and put it in the reserve, because that could really undermine the Bitcoin project to some extent. You'd at least maybe want to do sort of an influence campaign among Bitcoiners. And so beware if you start seeing that.
All right, everyone. Welcome back to the Bitcoin Policy Hour, a weekly podcast hosted by the Bitcoin Policy Institute. We got some good topics this week. Going to hit some market structure updates. There was a big update from the Fed, Governor Waller. We've got Cuomo making some last-minute moves in the New York mayor race. CZ was pardoned by Trump. And then we got a little bit of quantum sputtering happening, and so maybe something to dig into there. But this week, as usual, Zack Cohen, associate with the Bitcoin Policy Institute, joined by Zack Shapiro, BPI's head of policy, Ken Egan, BPI's director of government affairs. Thank you both for joining as usual. And yeah, we're going to jump right in here. Ken, it was a busy week on the market structure front. A lot of chatter happening on Twitter. Got some good reporting from a number of folks. Yeah, can you catch us up? What was all the drama this week?
A lot of chatter on Twitter and maybe less chatter on Capitol Hill. So I think, as we discussed last week, following the leak of some notes, I think it's arguable if they are some notes about potential regulations targeting DeFi that Democrats might want to add to the bill. I think that has derailed negotiations such that what I'm hearing from people on Capitol Hill in both parties is that we're kind of back to square one, and that negotiations are we're going to have to start fresh. I think there's a lot of bad blood following that leak. One thing I heard consistently from from staffers was that they were really, really off put by the violent reaction. Won't call it violent. We'll call it robust response from industry when that hit. I think it was frustrating to them because in their mind, these were notes that were not intended to be discussed in public, and then they were. And then they all, were taking rounds from all across industry over notes they didn't want published in the first place. Now, again, you can make the case that the existence of that thinking in parts of Congress is not productive. Nevertheless, I do believe that what was released on DeFi was not supposed to be released. And I think the reaction that these offices had to deal with, like 15 minutes after it hit, really has really created a lot of bad blood. Because again, there's not just having to deal with your office being bombarded by messages by lobbyists banging on the door, telling you what you're doing is terrible. But then there's the sense that somebody betrayed the negotiations. And it's really hard to negotiate, especially something like this that's complicated and new. And even staffers and members that I would consider strong supporters of, call it, digital assets for the purpose of what we're talking about here, market structure. There's still a lot of learning to be done, and this is complicated stuff. So the dust up really, really set things back. I know there was hope that this was going to be done by the end of October. No, it's not going to be done by the end of October. Hopefully, what I'm hearing now is they're hoping to get it done by the end of the year. I think in some quarters, there's just hope that it's going to get done at all. I don't want to sound too, again, this just happened. People are still sort of licking their wounds and doing their sort of grousing on their teams about how terrible other people were. But this was a setback, and it's going to take some time for confidence building to get this negotiations back on track.
There was a video that I think I tagged you on Twitter from Brian Armstrong. That, his usual, we're in the best spot we've ever been in on market structure. We've got, all the momentum in the world. And then he made some comments, and maybe you can remind us of what those were, Ken. Basically talking about regulating protocols versus companies, et cetera. And that was sort of the sticking point that they were hearing from Democrats, I presume. That to me seemed like a pretty negative implication, but curious if you think differently.
So instinctively, when I hear words like AML, counterterrorism finance, crime prevention, I immediately think about self-custody. And that DeFi memo, those notes that were released, we're focused on giving the government additional powers to regulate DeFi actors. So I'd rather hear our leading crypto executives talking about self-custody, talking about the rights of software developers. I think that's fundamental. I think without those two things, this industry never reaches full potential. But when I hear these things, DC always talks in code, right? No one's going to say, I'm going to take away your right to self-custody. They'll say, we're going to do things in the name of protecting your children and, all the other tropes. So not encouraging, but we're working on a BPI with saveourwallets.org, is keeping this issue front and center. This is what I talk about when I'm on the Hill. And I don't want to sort of soft sell the interest that members have in this. It's just when we're, again, talking about legislation that's complex, that is an industry that really is only 15 years old at best, not even 10 years old in some instances with the DeFi stuff. There's just not a lot of knowledge, and it's very easy because it fits into the narrative, it fits into the structure that Washington's used to. Washington's used to intermediaries that can tweak and pull and touch and manipulate protocols, financial rails. So it's very natural. So the language you saw in that DeFi memo, it fits into what Washington's used to. It speaks to aspects of law enforcement, regulatory establishment that is just used to having these things and wants to have them, all in the name of protecting you from mysterious criminals. So not terribly encouraging, but the fight's not over. Again, as I do on Twitter every day, for every random opportunity, encourage people to call your representative, call your senator, and let them know that self-custody and the rights of software developers are not negotiable. Very important.
Zach, it feels a little bit like your prediction might be coming true here, and that the Blockchain Regulatory Certainty Act provisions are sort of the piece of the pie that's holding up the rest of the legislation. Do you think that's a correct take? Do you feel even more confident in your take now?
Yeah, I mean, it certainly couldn't be. I don't want that to be true.
Yeah.
I think this is the hill we need to die on, and so we need this to get through if we're going to be supportive of clarity, and the industry should insist on this. If we're going to have any market structure, it needs to solve this issue, because what does it all mean if you can't build the technology that differentiates blockchain from TradFi? But I think, as Ken mentioned, I think there just is some education that's a necessary prerequisite here, and and some important messaging around, like, no one wants to help the bad guys, right? Like, no one is saying that there should be a loophole in regulation. No one is in favor of North Korea stealing a bunch of money for their missile program. No one's in favor of people using crypto to fund child abuse on the dark web. No one's in favor of using crypto for terrorist financing. And in the absence of sort of new laws, like, all we have is sort of a lack of clarity on where the laws apply. But if you use cryptocurrency, if you use any crypto tools, including non-custodial tools, for criminal purposes, that's still illegal. It's still a crime. If you deploy or build tools for the purpose of aiding criminals, including through money laundering, that's also a crime, right? That's conspiracy to commit money laundering. The thing that we are specifically concerned about is not fighting bad actors that use DeFi. I think everyone's on the same side there. The question is, what prior restraints, if any, should apply to writing code in a neutral way? Putting aside your intent, if your intent is to use the code for bad purposes, we can criminalize the intent. And so hopefully, if we can sort of get that across, that, like, not only is the existing law adequate, but actually, as demonstrated by the giant $15 billion recovery of Bitcoin from non-custodial wallets from the Cambodian law enforcement act we discussed a week or two ago, the existing tools are enough. We just shouldn't also be throwing developers in jail.
Building on what Zach said, we touched on this last week. That seizure is a great example of why focusing on nation-state support for these networks is really important. I think TRM Labs did an excellent overview of that seizure. Great detail about the mechanics of how the network worked. But a big part of that was, and this is included in the DOJ indictment, the active support of Chinese security services, of Cambodian government officials, not only facilitating but enabling this activity. So I think if we take at face value some of the concerns that members of Congress raise when they talk about regulating DeFi, that criminal activity touches millions of Americans. Pig butchering touches millions of Americans. If we take them, and I think there are people in Washington that just don't like the industry, but I think there are people that actually are concerned about these things and want to do the right thing. I think addressing the nation state actor issue is fundamentally it attacks the root cause of not all of it, but a substantial portion of online crime, certainly involving Bitcoin and other cryptocurrencies. It addresses a significant part of that, and again, is a real solution to part of the problem. So that's my view. We're talking about that on Capitol Hill a lot this week. We're getting good reception. We're getting sort of the people. I think some of these staffers are just so beaten down by crypto industry coming in yelling at them about DeFi. When they hear actually an interesting perspective that may help solve the problem, they do perk up. And I'm getting a lot of perking up in meetings when I bring up this nation state part because it addresses some of the core national security aspects of it. It addresses crypto crime, but it also potentially gives the government tools to address outside of pig butchering other aspects of crypto crime, including Lazarus Group North Korea, including ransomware actors, and it doesn't require impeding our ability to self-custody, for example.
Yeah. Also, sorry, I was just looking on Twitter to find this image of David Sachs with Baby Dog. It seems like Baby Dog had quite a busy week. Curious potentially on the extent to which the White House is going to apply increasing pressure on this. Right, obviously Sachs and Patrick Witt were down on Capitol Hill this week. Potentially on the industry side, also talking to lawmakers. Ken, I mean, you're obviously pretty bearish. Do you think this has any sort of positive moving impact on it? Do Sachs and Witt even care about the BRCA stuff? I'm just kind of curious how the White House potentially factors into this equation.
No, I think they do. Nothing the White House has done has given anybody any indication that they don't value BRCA provisions. And we need to forget that these are born of a bipartisan consensus in the House of Representatives, right? So I've not heard, seen, read any indication that the White House is willing to trade these to get other aspects of the bill done. That said, this is the White House priority. They set this as a priority at the beginning of the year, and the White House wants to get it done. So the only way to really do that, first of all, you have to keep your own caucus in line, right? I mean, you've seen, for example, Senator Kennedy from Louisiana has expressed publicly some significant concerns about market structure and the industry at whole. So we have to assume that if a prominent senator like Senator Kennedy is talking about this publicly, that maybe other senators who are just not interested in talking about it publicly share those concerns. So what David Sachs and Patrick Witt are doing on the Hill is very important for, if nothing else, keeping the Republican senators on board with the bill. And then it's important that the White House leads on this issue. There will be bills coming up in the future that Democrats want concessions on and help from the White House. And this is what senior government guys like David Sachs and Patrick Witt do. They make deals, they deal with the opposition, and they find ways to get bills done. So no, I am not worried about the White House caving or giving in on this issue. I'm more concerned about nothing happening than something bad happening.
Yeah, that's helpful. Okay, let's see. Earlier this week, we had some news from a Fed press conference that Chris Waller and company are, I guess, evaluating. I don't know exactly, where this is in its kind of production line, but the potential for what they're calling skinny accounts at the Federal Reserve, right? Basically, sort of accounts that are allowing companies, potentially stablecoin issuers, to have a window with the Fed, but not a full master account. This seems like pretty bullish. Kind of curious on maybe the Bitcoin angle here, but maybe let's start on the stablecoin angle. And Zach, maybe you can just kind of tell us what this move actually means.
I actually think it's probably most helpful to focus on the bigger picture here, which is this is a massive corrective to what we saw happen with sort of crypto-related banks that wanted access to the Fed before. If you look at the whole saga that played out with Custodia Bank, where they were just begging the Fed for recognition and they wanted to do best practices, I think what we're seeing here with this new Fed policy is a recognition that it's better sort of not to play politics in general with who the Fed is going to support, and actually to move from more of a discretion-based model to sort of more of a modular, if you meet the requirements, sort of as a matter of course, you're going to get access. I actually think in some ways it's parallel to what we're seeing the SEC move towards with crypto ETFs, where there was the big fight about, are we going to have a Bitcoin ETF, given that there are already futures ETFs? And then I guess the same reasoning applies to Ethereum. And now, like, we don't want to have to parse which of these tokens qualify for an ETP or ETF or whatever. And so there's just going to be a process, and it's going to be sort of more of a commoditized service. I think that is what we were seeing with the Fed. And I think that is probably a wise move if we're going to move to more of a sort of stablecoin supported open network model of finance, is that government needs something that looks a little bit more like an API than it does a sort of traditional regulatory board that's going to take things on a case-by-case basis, that you plug into the Fed rather than sort of working through the process forever to get their blessing.
That's definitely the right way of looking at it. I think Caitlin, she did tweet a little bit on this. I can pull it up, but Ken, I'm kind of curious, like, politically speaking, and obviously the Fed, Fed independence and whatever it may be, like, does this sort of signal some kind of political change that we're seeing here, right? This seems like something prior Feds might not have been open to. Curious if there's any kind of behind the scenes thoughts on this.
Yeah, I think it's a recognition of the growing importance of the industry. One of my guilty pastimes on the weekends is reading European economists in, like, The Economist or the Financial Times hyperventilate about stablecoins and Bitcoin and how it's going to destroy the global financial system. I think those criticisms come from a point of European weakness. But I think it's not unreasonable to think that as these grow, as the companies that support these protocols grow in financial importance, that it's going to be important for them to have an outlet should things happen. Because Bitcoin has 21 million. You saw this week that Paxos minted $300 trillion worth of stablecoins.
Yeah.
There's human error, and I don't. Again, there was an error. I don't. No criticism. Things happen, but things happen. There are humans in this process, and while every 10 minutes Bitcoin TikTok, the rest of the industry is not like that. And I think it's a recognition, first of all, that the political environment has changed. This industry is here to stay. That these companies, the protocols are going to occupy a larger and an increasingly larger portion of sort of global capital, and that the companies that are building these products and selling them to the world are going to become structurally important. And with that, because they're humans, because sometimes companies accidentally mint $300 trillion worth of USDC, maybe there's a need for some kind of backstopping on the monetary side. But that's where I think it's coming from. It's been overdone. Fed independence, Trump beating on Jay Powell. It's long established. But I do think that inside the Fed, and even this, I'm sure this is a result of a lot of discussion between Treasury and the Fed, that the industry is growing in importance, that stablecoins and Bitcoin and crypto et al. Are going to grow in importance, are going to become structurally more and more important. And thus, I think they just want to be able to, when the human error happens, throw a lifeline.
One angle I want to take here, and curious on both of your thoughts, is the sort of Nick Carter-esque, like, narrow bank narrative. And I can't say I'm an expert on the subject, but it seems to me like this is potentially like step number one to a more of a narrow banking system, potentially going forward. Zach, I don't know how familiar you are with it, but kind of curious on your thoughts.
So I'm not super familiar with narrow banking in particular, but I would note, familiar with Nick's work on sort of a return to the free banking era and how stablecoins in some sense, like, issue money in the same way that free banks used to issue money. And they're backed with base money in the way that banknotes from private banks used to be backed with gold. And so they will, trade in their own environment. They might trade at their own prices, and they will trade at the reserves that the market will bear. By the way, I think this is interesting for the future of Bitcoin, to the extent that we're going to have something that you could rightfully call a Bitcoin bank. They're not going to be fully reserved. Maybe some will, and it'll be a way that you get credit, but they're going to be Bitcoin banks that will have some reasonable fractional reserve, not maybe the sort of 10% of less or less of reserves that that modern banks have, but it'll issue other instruments, maybe denominated dollars, maybe denominated in Bitcoin, and you're going to trust sort of how much Bitcoin this bank is holding, and you're going to be paid an interest rate accordingly, and their notes are going to trade accordingly. So I think that is one piece of it. Also, increasingly, banks are sort of being disintermediated from the roles that they used to play. At the consumer level, we're seeing neobanks and fintechs take an incredibly sort of expanded role in trading, in people's day-to-day banking activities, in credit. There are apps that provide peer-to-peer credit that have different regulations than banks that consumers use. Large companies, when they want to borrow money, are increasingly going to non-bank firms like Apollo that are serving as shadow banks. And so the conceptual boundaries of who does banking, I think, is expanding as a broader matter, and definitely stablecoins are going to be an important part of that story.
Yeah, at risk of messing this up completely, I think the basic premise is that a narrow bank would basically just be holding U.S. Treasuries, probably short dated, and that again they would be sort of fully reserved to that extent. And I think a lot of the kind of underpinning here is that the traditional sort of fractionally reserved bank is potentially a product of a sort of monopoly on slips with the Fed, basically, right? You have to be a chartered bank to get that slip. And then once you do that, then you play all the, classic fiat games. And the reason that that's sort of enabled is because there really isn't competition. And that's potentially why we saw, Caitlin Long and Custodia Bank having such a sort of hissy fit with the Fed, because the Fed was like, well, shoot, if we let this happen, then all the, fractionally reserved banks are going to have effectively a deposit drain. And that's also been the narrative with stablecoins. So again, I'm just really kind of curious, and we've dug into it a little bit, but the number one complaint I think that I've heard from the sort of traditional side on stablecoins is that these will, especially to the extent that exchanges are paying interest on or yield on the stablecoins, that this is going to drain deposits. And knowing that one of the Fed's sort of mandates, maybe more implicitly, is to ensure that the banking system remains fully solvent and banks are protected and et cetera. To me, this seems like it could put that in danger if you consider stablecoins as some kind of risk to the banking system. I just kind of want to pull on this thread a little bit if you all want to.
Sure. So right now you can get yield on your stablecoins by putting them on an exchange, right? I have the Coinbase credit card. I keep some amount of USDC on Coinbase in order to unlock whatever more Bitcoin back on my purchases. And I'm earning, I think, 4% or a little bit less than 4% on my USDC. Circle is not paying that to me, but Coinbase is. I don't use that as my primary bank account, but if I were inclined to, there's nothing in the Genius Act or sort of prohibition on the stablecoin issuer themselves paying yield that is stopping this activity from happening, as evidenced by what Coinbase is doing. By the way, Coinbase gets, I think, according to Circle's public filings, more than half of Circle's top line revenue. So the boundaries between Coinbase and Circle are blurry enough as it is. So I guess all this to say, to the extent that there is product market fit for something like stablecoin issuers that are willing to pay higher yields than banks, and what they're doing is they're just passing on short-term treasury yields in a more generous way than regulated banks are going to do, and consumers want that, people are going to find a way to get that yield. If it has to be offshore, it's going to happen offshore. And then what do we do about it from a regulatory perspective? I guess the problem is that compatible with the type of FDIC protections that we want to have, and the idea that banks are systemically important and the government's going to bail out a certain number of banks if things go wrong, and to what extent are we going to let the market choose between options, and to what extent, because this is propped up by the government, do we need to narrow the pool? I think that may be a hard problem, but it would be a harder problem if I feel like the banks themselves weren't taking the risk and leverage that we notice that they take every 10 years when something goes wrong.
Right.
And so I don't have a huge amount of sympathy for the banking lobbies worry about this. I think at some point, like, people need to take their medicine, and I probably would rather see regulation at the level of sort of fraud protections and like going after direct consumer harm. If you're going to offer these services, you're going to have to be transparent with your reserves, with your practices, who counterparties are, what the technological risks are, and then allow people to make choices. And then maybe around the edges, we can have regulation about, all right, what is the outer bound of risk, at least in the United States, we're going to allow. But it's hard for me to see that like fulsome gatekeeping here is the right approach.
Yeah, it seems like another reading here also, and we'll move on in just a second, is potentially also that they're kind of between a rock and a hard place, right? It's like you have the stablecoin issuers who are buying, treasuries at a pretty significant extent, and only growing. And then, so that's on one side of the equation. And on the other side, you have, this potential like threat to the banking lobby, right? That they don't like perfectly serve, but have had a positive relationship with in the past. And it's like, which one are you going to pick, right? Like, would you rather have more demand for U.S. Treasuries, or would you rather protect the traditional banking system? Yeah, I'm just curious if this is kind of like an indicator of the fact that the demand for the Treasuries might actually be outweighing their sort of existing relationship with traditional banking. Let's close that out there.
Well, yeah, the demand for
yeah.
treasuries is everything. There's two parts to this, right? There's demand for treasuries and global dollar competition. But I think this sort of relates back to our previous discussion about skinny accounts, recognition that the financial system is changing. I mean, modern banking only exists because the treasury standard exists in the world, right? It can't exist without that standard. I think you've seen a recognition from the Fed that system is going to evolve. Skinny accounts is part of it. And again, props to Caitlin Long. She's been, banging her head against the wall for a long time. And of course, it's the stablecoin people that brought this change. That's okay. Change is good. Change is good change. So I think this is all part and parcel of the same discussion we had before about skinny accounts. The banking system is going to change. The reason why the issuers can't get yield now is because the other BPI, the Bank Policy Institute, fought it tooth and nail. They fought it tooth and nail. But now banks, as I understand it, banks can hold reserves in stable coins. So there's been a lot of discussion about rollout Genius and what Genius probably crafted. I think you'll see some changes. And I think once the banking system digests this, we'll call it the banking lobby is a better way to say it. They're gonna find better ways that still provide them some regulatory institutional capture. But they're gonna find better ways to take advantage of the system.
Yep. Well said. That was a nice, neat bow. Thank you, Ken. Okay. Mr. Cuomo is probably cooked. Mr. Cuomo is probably cooked in the New York mayor race. It looks like Mondami is going to win, at least according to Polymarket and most of the other estimates out there. But he did make a sort of last-ditch effort to potentially win over crypto voters, is how this story is being spun. Zack, you are a local. You have a little bit more skin in the game than Ken or I do. Curious on what happened and your take on it.
Yeah, I think actually you've summed up the entire important part of this. It is a last ditch take. He's not going to win, and so it's mostly irrelevant. I would add two more reasons it's irrelevant. One, Mayor Adams already just made this announcement, and so this is just literally copycatting what Mayor Adams did. And second, New York is not going to be the crypto capital or center of anything until New York State gets rid of the BIT license, which makes it impossible to start crypto businesses here. I guess it's a good sign of the times. People are pandering to crypto and Bitcoin voters, and everyone saw how powerful that was in 2024. But I think really that's the long and short of it.
Yeah, I mean, I think the sort of classic spin here is, there's a growing recognition, among politicians. We're very intimately familiar with that. But for folks who maybe, weren't paying as much attention, this is like one domino after the next of politicians realizing how strong the Bitcoin community is and the Bitcoin voting bloc is. And, again, the evidence being that, this is the last ditch effort, right? Like of all the things that Cuomo could have thrown to try to tip this, well, hey, let me see if the crypto money can come in and maybe right the ship. But yeah, I tend to agree that this is largely irrelevant.
Yeah, although I mean, these things need to get more sophisticated over time, right? So the first round of we're going to pander to the crypto vote is we're going to accept taxes in Bitcoin, as if anyone wants to pay their taxes in Bitcoin. And so when people, I sometimes hear from people like, oh, this and that is the most crypto forward state because they accept taxes in Bitcoin. It's like, no, actually that means that they have no idea what they're talking about, right? And then the next is we're going to be a hub for innovation, and there's a council. And unfortunately, with a lot of these, we've seen this in our work at BPI, those can have a negative selection bias where the people who want to be the city or state head of crypto, whatever, tend to be exactly the people you don't want to do that. But what is interesting to see is some states are now on the cutting edge of what policies actually make sense at the state level, and really paving the way for businesses, which in New York, really, you had to get rid of the bit license first. But there are other things you can do to incentivize people building cutting edge technology in your state. And then public investment in Bitcoin, right? People don't want to pay their taxes in Bitcoin, but maybe the state should hold some of their reserves on the balance sheet in Bitcoin. I think that's a powerful signal. And so it is interesting to see these sort of progression of we want to do something, we want to signal we're innovative. Oh, actually, this is a sort of powerful group. We should see what they care about. To, okay, we kind of understand this better, and we want to signal that we know what we're doing. It's a process.
Yeah. Ken, any thoughts on the matter?
So I'm a New York refugee. I grew up in New York. I remember in the 80s, Curtis Sliwa and his Guardian Angels in the subways. And a long time ago, wearing their red berets. When I was much younger, I grew up with Andrew Cuomo's father, Mario Cuomo, as governor of the state. These are echoes from the past, and people are wondering why Mamdani's getting such a, why he's having such an impact. The city's changed, and again, maybe the best way to adjust that change is not to bring names back from the 1980s and 90s. But I had another point to Zach's point about regulatory environment. There's an article in the Wall Street Journal last week that now JP Morgan Bank has more employees in Texas than New York. That's a significant change. That means something. That means in regulations, despite the tremendous gravitational pull of New York City and region, money talks and regulations matter, and people will go. Water flows the easiest path, right? These businesses will go where they're treated best. And to make New York City the crypto capital of the world is going to require all the things that Zach said, and probably more.
Yeah, although JP Morgan, I don't know if you've seen their offices, they're just opening up. It's really something. It's like the Death Star.
All the monitors. That was pretty wild.
And it's a pretty cool building from the outside. It's enormous. It's very modern looking. They've got a high-end chef who's going to sort of make lunch for everyone every day. It's a pretty cool office.
Ideas for BPI.
Yeah.
We will not be using donor money to pay for chefs, at least at this point in time. Okay.
Well said.
Cool. I think we can largely wrap that up. I mean, I think the thing to underscore here, just for folks listening, is, one more indication that the Bitcoin voting block and the crypto voting block is a powerful one. Politicians are taking notice. And I think the other way to spin this is just that, there really is no downside for politicians to embrace, this new set of technologies, right? We're obviously, Bitcoin focused, but there's sort of increasing evidence that regardless of what side of the aisle you're on, this is really only going to help your case. So big news of the week that I think has elicited some reactions is the Trump administration's pardoning of crypto billionaire CZ of Binance. Someone, I think, I can't remember where the original article came from, but they tracked back, the lawyer working on the World Liberty Foundation or whatever it's called, and the US one stablecoin situation. It all smells a little bit bad, but I'm kind of curious on what actually about this smells the worst, to continue the metaphor. I don't know if either one of you want to kick us off here.
I'll say this. Binance is the Binance is the engine behind global crypto adoption, even after, despite what happened with the criminal case in the U.S. What was it, 2 years ago, a year and a half ago? They remain the largest player in the crypto space. So yeah, it's no surprise to me that the Trump administration wants to see Binance at least sort of spiritually supportive of American industry and what we're doing here. Again, it's I think, Zack can speak better to this because Zack is a lawyer in this space. But it is a small space. There's not 1,000 lawyers, 10,000 lawyers who can do these jobs and are doing these jobs. Maybe there will be in 10 years, but there's not now. So again, I'm always hesitant to ascribe terrible motives to things, but I do think that it is the Trump administration wants to see the biggest players in crypto, and CZ and Binance are the biggest player in crypto. They want to see them doing things that are friendly to the United States. So I think there's been quibbling. His part of his release was that he wasn't supposed to be part of Binance anymore. That seems to have just been forgotten. And now he's been pardoned, so it doesn't matter anymore. So he's back out doing things, and he's going to be shaping this global market. So they want him on our side,
on Team USA.
On Team USA.
This is a complicated story. I mean, the part of it that smells the worst is pretty clear. I mean, it is the business relationship between the Trump family and it involving Binance. And specifically, it's sort of this 3-party agreement where there was a Saudi company that made an investment in the Trump family's DeFi project, World Liberty Financial, on Binance. And they did it using USD1, which is the Trump family's stablecoin. And those are held on Binance. And so that provided a huge amount of liquidity for USD1. The reporting is Trump is making something like $80 million a year on the float from that, because as we talked about, if you're a stablecoin issuer, you get to keep the interest payments. And so there is some financial relationship between the two. And Trump has claimed he's never met CZ, but they do have this financial entanglement. CZ's pardon lawyer, and I think she's been public about it, is Teresi Guillen from Baker Hofstadter. She's a great crypto lawyer. She's been involved in lots of stuff. I wouldn't expect that she'd have done anything wrong, and she's just a well-connected, sort of good crypto lawyer. The other side of this, though, is that the personal prosecution of CZ was kind of bullshit, right? Was it wrong for the United States government to go after Binance? I think it was probably what they went after them for money transmitter violations, so not having an adequate KYC AML program, which if you read the facts in the case, they just clearly didn't, and they knew they didn't. And then for IEPA sanctions violations. The same thing that Roman Storm was charged with, that their platform was being used to evade sanctions by Iran, by Hamas, by all sorts of bad people. But one thing to note is these types of prosecutions happen in the banking sector all the time, and it's extremely rare. I don't know of another case where a individual executive at a bank was put in prison for this type of technical violation, right? Despite what some people are claiming it is, right? Elizabeth Warren is making it sound on Twitter like this was a money laundering prosecution. It wasn't. He wasn't charged with money laundering. He wasn't trying to help criminals. It was that the compliance on his platform wasn't adequate. And so I do have some sympathy for the idea that this was a politically motivated prosecution. We're making an example of a high profile crypto CEO. It's not a completely one-sided thing. And sometimes people do the right thing for the wrong reason.
Yeah. I think the wrinkle here, that's helpful, Zack. I think the wrinkle here is this is potentially yet another nail in the sort of market structure challenge, right? I think the initial reaction from Elizabeth Warren was, this is further evidence that market structure legislation is, sort of intended to enrich the Trump administration, that any sort of provisions in the legislation ought to be, thought through very carefully to the extent that it could benefit the Trump family. I don't know. It seems like kind of bad timing.
It hits both of the politically weak points.
Yeah.
It's the Trump family and its national security.
Right.
It just has nothing to do with the BRCA.
There's still a lot of Elizabeth Warren talking in Democratic circles. I told you so. I told you so. I told you so. That's happening. And yeah, this doesn't help.
Friend of the pod, Amanda Fisher, was having a tough time with the pardon this week.
Friend of the pod. Oh my gosh. Okay.
That's really good.
All right, we've got about 15 minutes left here. And Ken, you're gonna be the Matthew Pines fill in on the resumption of our quantum talk. So earlier this week, looks like there was some news. Quantum computing firms jump after report U.S. government stake talks. And then there was some tweets that were circulating around that. I'm happy to come back to that, but yeah, one of y'all kick us off here.
So I think this is just the next step in what has become an established policy of the Trump administration to invest in sectors that are of critical national security importance. And I note that he's not taking ownership of textile mills. He's not taking ownership of other random things. Air conditioning production. He's taking partial ownership in companies that serve a distinct national security purpose. And quantum, I think, for the national security establishment, is one of the most important things they're concerned about. It's a global competition issue, but also, what's the concern about quantum for Bitcoin? It's going to break the encryption. Well, Bitcoin is not the only important encrypted thing in the world. The U.S. government keeps lots of secrets that are encrypted. You can collect and grab those messages, that internet traffic that's encrypted, but with quantum, all that is threatened. So it is, I think, of critical national security importance that the U.S. wins that quantum race. I don't know how they fix that problem of adversaries decrypting every piece of internet traffic they've stockpiled over the past 30 years. But we certainly want to be the first ones to do it. And so I think that this is a key point. I think even on the Bitcoin discussion, people see it, like Congress does things and it moves, but when you see fast action and when the big institutional gears start to move is when you talk about national security issues. AI obviously I think it is all kicked off with rare earths. AI as obviously next. Quantum is what threatens that. I think of all those things. Certainly on the information warfare side, quantum poses the greatest threat. And we can all kinds of discussions about how close we are. But we don't want to find out that our predictions of 5 years turns out to be 2 years or 3 years or even 15 minutes before an adversary does it. We want to be the ones to do it. So it makes perfect sense that quantum was the next sector where the Trump administration sought to make government investments, because it's a linchpin for national security.
Yeah, I think that's an interesting angle to approach this issue on. Let's dig into that a little bit more, right? We saw significant investment from the Trump administration on the AI side. We have, David Sachs in the White House as the AI and crypto czar. It seems like his main focus for the first little bit of his tenure has been on the AI side, and this is obviously not any reason to think that has slowed down at all. And in fact, it seems to me that it's kind of speeding up. But yeah, interesting to think that there's a sort of parallel here. Maybe somebody wants to do like a quantum 2027 or whatever the earliest timeline is on that of like, hey, how does this thing progress, and when it reaches these points, this is what becomes vulnerable.
Not only are they parallel, they intersect with each other. I think to motivate some of the national security concerns, I brought this up at a talk I gave on a panel on Monday. But to me, one of the nightmare scenarios has to do with something that Ken mentioned a few moments ago when he talked about the last 30 years of traffic that the Chinese have been collecting. And the sort of term for this is harvest now, decrypt later. And the idea is you can, intercept a huge amount of encrypted communication. You stockpile that. One day, quantum will let you reverse the encryption, and then you can read it in clear text. And, maybe you get some sort of national security related secrets. But even if you don't, the sheer volume of data, especially in conjunction with powerful AI, is incredibly powerful. One sort of scenario you could paint is, right, that China wants to invade Taiwan sometime in the future. The United States is militarily poised to help stop that. you need to knock the United States on its back foot. How are you going to do that? So you could launch a kinetic attack, but that really risks nuclear war, so you don't want to do that. You could launch a really devastating cyber attack where you take down parts of the grid, but that too probably really risks a nuclear war, and you don't want to do that. Is there something a little bit sort of craftier you could do? Well, what if you had sort of everyone's text to each other and browser history and incredibly powerful Palantir like AI technology to be able to sort that? And by the way, maybe you can hack into people's sort of personal LLM accounts and you understand their sort of relationships better. And either for like a subset of the military or just a big part of the population, you send people a personalized text or email with the sort of one or two things that will destabilize their work or personal relationships. And we all have this, right? We've all said something or looked up something on our computer in a moment in time. That's not necessarily like in of itself bad or a crime or anything like that. But in the context of our personal or professional relationships, it'd be really bad if like a specific person knew about that specific thing that you said or did or whatever. And if we all have that drop at once, right? It's not like saying, okay, we're gonna release everyone's sort of porn browser history where socially you think we get through that. It's like whatever, right? But if it is like personal and directed and it's different for everyone, you could see that causing at least, a couple days or a couple weeks of chaos. And that doesn't require you to get to the most sensitive systems. That's just like the lowest hanging fruit of internet traffic that we are all, like hopefully we're using encrypted, like HTTPS, but we're leaking that data all the time. And so I think that is like just one of the ways that you can evoke the ways in which this really could be a national security concern.
Yeah. And I think on the investment side, clearly like AI is not starved for money right now. Quantum is, and I suspect, I don't know this, but I suspect that the sexiest experimental quantum computers in China are sitting in either national labs or in national universities, kind of the same thing. So it makes perfect sense that, again, not that that the Chinese government doesn't encourage competition, it does in a different sort of way. But I think it's just a recognition on the Trump administration side that these companies can't, at this point, it's too important to depend on the three of us buying stocks in Rigetti to make sure that they get the money they need. National security priorities require that question is not even a question, that they definitely get the money they need. And the other, 3 or 4 companies that were mentioned. And Zack missed his calling as a CIA analyst. I mean, he's right on. You do something, then you have pathways of de-escalation. That's sort of standard stuff. And not that I have anything to hide, but I'm looking at Cohen, and I don't know.
Oh, guilty. I'm curious also. So last week, I think I made a comment that was something along the lines of, okay, well, the strategic Bitcoin reserve, has sort of established an incentive for the U.S. government to sort of seek out and find these, hordes of Bitcoin that have been procured in ways that we, deem bad or illegal, and that this is like a positive incentive, right? And I think, one way of looking at this, and I'm happy to have my opinion changed on it, is, okay, well, potentially, a lot of quantum, sort of vulnerable coins, of which sort of unclear how many there are, but it's quite a bit, could be sort of negative incentive for the U.S. government to, sort of advance the quantum development timeline as fast as possible, right? And I recognize that there's a little bit of complexity here, right? It's like, okay, if it's the US versus China or US versus some other adversary, we obviously have an incentive for the US government to get to those coins before China or Russia or whoever it may be. But like, do we want those coins going into the strategic Bitcoin reserve, right? I think like this brings up an interesting question. So curious on y'all's thoughts on this.
I think all roads lead to the United States wanting quantum supremacy. I think the race with China is a powerful motivator. I think the sort of non-Bitcoin stuff that encryption protects is a very strong motivator. Even if you're worried about protecting the Bitcoin reserve, you want to be first and not them. And so I think the sort of the path we've been talking about is overdetermined. There's a separate sort of game theory of, all right, let's say you have quantum supremacy, like you you're able to, so you have the secret capability of cracking Bitcoin's encryption. What do you do at that point? And that's a difficult question for that actor. Like, how do you feel about Bitcoin? I think we'd rather it be the United States, where it's in our interest for Bitcoin to do well. Now, that doesn't answer the question of what you do. I tend to think the answer is probably not you seize Satoshi's coins and put it in the reserve, because that could really undermine the Bitcoin project to some extent. You'd at least maybe want to do sort of an influence campaign among Bitcoiners. And so beware if you start seeing that. But no, I mean, I think it's pretty unlikely that that is exactly how it plays out. I think the thing to consider more, and something I'm sure the government is thinking about, but like, what happens if we're not first? Right? What happens if it's the Chinese? And that plays out in all sorts of different ways. But like, bring it back to Bitcoin. What happens to Bitcoin consensus if the Chinese do that and they take Satoshi's coins? Are we going to fork it off? Are we going to say, okay, these are just CCP coins now? How's the U.S. government going to react to that? If China all of a sudden has an outsized position that might be multiples of what we have in an era where Bitcoin is more valuable and more important to the global economy than it is now? I actually think that like that is the sort of stronger and scarier question.
Yeah, I know Bitcoin's really important to us and everybody listening. It's not the most important thing to China. It's certainly not the first thing they're going to do. When on a given day, they have a breakthrough that's capable of taking all of our coins from us. The first thing they do is not going to point at the Bitcoin network. They have other things they're going to point at that. So I don't know. I think there'll be other indicators that bad things are underway if they get there first. And I think some of the things Zack mentioned are far more likely after they decrypt 30 years of internet traffic and whatever else they've been able to collect. I do think, though, on the institutional side, it does raise an issue that I know occasionally gets talked about in sort of Bitcoin circles about consensus. Is up until now, Bitcoin developers have been small group people, most of whom have known each other, despite sort of the hubbub about core and not snap, which we're not going to talk about. There's been general alignment on the direction of the protocol. At some point, big institutions like BlackRock and others they're going to hire a smart young Bitcoin developer who's going to say something in a meeting, and they're going to say, wait a minute, you're telling me that the billions of dollars we hold in this ETF, the software governing the management of those is being decided by who? We want to say, because we're a massive holder. So I'm not technical at all, but I do understand institutions. And if you find yourself a situation where the U.S. government does have significant Bitcoin holdings, other governments have significant Bitcoin holdings, certainly other institutions, they're going to want to know how Bitcoin is governed, and they're going to want to say in how the protocol evolves. So up until now, we've been very lucky in that BlackRock hasn't hired a team of Bitcoin developers doing all kinds of stuff. That is probably going to change. It's not inevitable. I mean, it's not. We can't expect that it's going to stay the way it was now. And it's just everybody who's known each other and yelling at each other on Twitter is going and on delving Bitcoin. That's how it's going to be forever. Institutions, governments who have stake in this protocol are going to want to say in how it's governed. This is why I think it's important that somebody, I'm happy to give my opinion, fix consensus and how changes are rolled out. Because if we don't do it, other actors are gonna roll in and do it. And when you have super nodes and huge holders, people are gonna make decisions about which chain they follow or which path they follow. BlackRock's going to follow the path that helps their ETF holdings. The U.S. government's going to follow the path that makes sense for them, whether it's on the Bitcoin holdings or national security. So this is why it's I occasionally rant about this on Twitter, on X, but I think the consensus question is really important, and and quantum is just part of it. The day will come when the Bitcoin developer community has to address the quantum problem, but there are other things that I think are going to confront the community before quantum. And we need to figure out a way to at least present somewhat of a united front to show the world, no, the community as it exists has its shit together. Welcome to join us on this path, as opposed to like other people try to blaze their own path, which may be in their self-interest, but not in the interest of Bitcoin. And we've seen there are institutions that have different ideas what Bitcoin should be, and sometimes those ideas serve the interest of those institutions, not necessarily the protocol.
Okay, Ken, you're wearing a PubKey hat. I
Yes.
hear that PubKey DC is bubbling at the very least. Any updates to share? Obviously, I think there's some stuff that's not public, but it's coming. It's coming soon.
I defer to the PubKey guys to talk about what's the dates. I'm wearing this because I walked past PubKey today. Just happened to be getting out of the metro. I had a lunch meeting and walked past PubKey, and it was a hive of activity. And I think it's out of the bag now. BPI is going to be co-located with PubKey soon. Very excited about the opening. PubKey is going to. There's actually a lot of positive anticipation, despite some of the nasty internet comments that when the news first broke that directed not at me, of course, but maybe other members of the Bitcoin community. But I think there's a lot of excitement in DC for the opening of PubKey. So this is why I'm rocking the PubKey hat today, because I'm pumped. It's coming soon.
Yeah, I've been hearing, at least in our team chat, we've got some furniture on its way in.
Apparently chandeliers were delivered today. Apparently, we just heard, right?
Big chandelier was brought in today. Yeah, exciting stuff. I think we're all looking forward to getting in there. Before the end of the year.
I think fair to say people will be able to celebrate Christmas at PubKey. I think that's probably fair to say.
There you go. You heard it here first. Yeah. A little bit of alpha from this week from BPI. Amazing. All right. Well, good rip, guys. I think next week we'll have Steven back in the mix, and hopefully BPI's newest hire, Connor Brown. That will be a fun rip. So yeah, tune back in next week. And yep, we'll see everyone then.